In Australia, the Greens have scored a major political win, securing coalition backing for a Senate inquiry into the capital gains tax discount, a move that could reignite the national debate over housing affordability. For more, we're joined by our money man, Dr. Steven Enticott from CIA Tax. Good to see you. What's the significance of the coalition and the Greens being on the same page over this?
Well, everyone seems to be on the same page with this one, but look, it's crazy, isn't it? You know, in the world of tax and politics, it's never quiet for too long. So we've just got past the superannuation changes where they're bringing in the 30 and the 40% tax rate for people that have too much in superannuation. And it seems to me that we only get a rest for one or 2 weeks, and then bang, there's a new one, capital gains tax. I've been talking about it for a while because it does appear to be too generous. And in a world of dwindling tax revenues, it's only a matter of time before they came after it. I'm a little bit surprised it's only taken 1 or 2 weeks to get onto it, but we're now into it. We're back talking about that 50% capital gains discount for investors who invested in an asset and paring that back. But
what does this do to people who are considering investing, given Australia has a housing shortage?
I actually think it's terrible from a point of view that people invest, and you come and see me as an accountant, I'll tell you never sell. So whether you're getting a 50% discount or what I think they'll head towards is more like a 25% or a 1/3% discount, you're still incurring a tax liability. So why are you actually selling here? So I don't think it's actually going to change investors too long who are going in with that longer mindset. It is going to pick up greater revenue when people are selling assets or are forced to sell assets. But ultimately it's all about housing affordability, they say. But as you know, tax has got nothing to do with housing affordability ultimately. It's about supply and demand. If you don't have supply, then prices, rents, capital costs have to rise.
What's interesting here is the Greens say that the 50% capital gains tax discount is actually driving up house prices. How is that possible?
I don't think it is. I think supply and demand is. You've got an influx of people coming into the country putting supply pressure on, and then you don't have enough building going on to meet demand. So house prices have got everything to do with supply and demand. Look outside of Sydney and Melbourne, get 3 or 4 hours from Sydney and Melbourne, you'll buy a house for $200,000 to $300,000 quite comfortably. Why? Because the demand issue isn't there.
Yeah, so you can buy it for that, but you'll never sell it.
That's right. It's all about tax. It's all about bringing in revenue. It's got nothing to do with housing affordability. It's about taxing people more, and that's all it's about.
How does a CGT discount actually though interact with negative gearing?
Yep, so negative gearing's great. In other words, if you're making a loss, all right, you will get some tax relief for making that loss. So even if you're a top tax payer, you spend $1 on an investment or you're losing $1 on investment, you'll receive about 50 cents in the dollar back. So that will help you invest in an asset and be able to hold it a bit longer, that you're getting some tax relief. I still believe that's got nothing to do with housing affordability. It may give us more building, more activity going on, but what's really driving it up is the cost of materials, the cost of labour, the lack of land being released for new housing dwellings. They're the main issues, not tax, not negative gearing. They're just the things politicians like to throw around. Those things are all about the tax conversation, not about housing affordability.
Now, as an accountant, you'd know a lot of people like to play cat and mouse with the ATO on these things as well. And every time a tax is brought in, there's a whole industry of people trying to find a way to get around it. Do you think that realistically the government will be able to make money from this sort of thing?
Look, ultimately, you come see me as an accountant, I'm going to say, don't sell, you won't be taxed. All right, so we've seen the Australian government, Australian Tax Office, Treasury, whoever, try to sneak unrealised capital gains tax in with the superannuation. There was that much resentment and that much pushback within government, within the tax office, within the public at large. It didn't get up. So I think, broadening that out into
let's not forget people in government own homes too.
Yeah, well, that's right. Family trusts are a great one. I remember when I got into tax 29 years ago, we were told then that family trusts are a dying breed and negative gearing's on the way out. If you go to the asset register of just about every politician in the land, they've all got rental properties and family trusts.
Well, yes, exactly, that's right. But people in Treasury often forget that they are there to serve the people, not just to make revenue. And that is the thing that politicians are very quickly reminded of.
Wouldn't it be great? Like, everyone in business at the moment has to look at their cost side of business. We're in a tough economy at the moment. You have to shave costs. You have to be more efficient.
Well, not the NDIS. They've just had a 100% increase in staff.
Wouldn't it be great if government said, hey, we've got a revenue problem, let's look at our cost equation. But no, they never seem to look at the cost. Or they might tickle costs a little bit, but they just look at more revenue to meet costs. It's the opposite.
Do you think the inquiry realistically could lead to reform?
Ultimately, yes. all right, purely because the Greens and Labor do pretty much have control of the upper and lower house. They've been pushing for a 2016, 2019, Labor went to the polls with this taxing policy of reducing the capital gains tax discount, and they lost it. But now they're in power. It sort of reminds me of John Howard when he got in. GST never got up until the second term. I'm sort of feeling that the capital gains chop is coming.
We've been wondering what Anthony Albanese will do with his majority, right? He had a thumping majority. The coalition is in absolute disarray at the moment over almost everything, particularly energy. This seems like the perfect time to be able to get away with what people on the left want to do, which is to hit those with wealth.
Well, if One Nation is 6% behind the Liberal Party, you've got a problem in the Liberal Party. So they're going to come after us. My view is it will change. Okay, they went hard with superannuation, then they pulled back a little bit. I think they're going to go hard with the capital gains tax and they'll pull back a little bit. What I've done personally is I've taken a look at my own assets that need to be sold in the next couple of years, and I'm bringing those asset sales forward because you're going to get a greater capital gains tax relief now than what you will later. That's my view. We don't know what's going to happen. But if you are holding assets and you are considering selling those assets, take a look at when the timing is, because I believe there is risk.
It's interesting, a lot of younger people, a lot of viewers of Ticker get into crypto because they feel like the government is coming after everything else. Do you understand that? It feels like you and I over the past few years have been talking more and more about the government taking more and more because the government doesn't want to cut its costs.
And look, I don't believe crypto's safe. Every time you look at someone's tax return, comes up on the portal yourself if you log on. If you've had any crypto dealings, it's already there in the ATO pre-fill. Yeah. So they're
onto that as well.
That's right. So maybe bury some gold under your house or something like that is the only way. Look, governments are going to continue to come for us, but what we've seen with superannuation, it's the first time in about 5 or 6 years where I've actually felt hope. They went too far. They were going for the unrealised element. They pulled back. And you go, well, maybe they are going to come, but maybe there's a sensible position they come back to.
That's what governments do all the time, right? Yep. It's what business does. They go too far, they try it on, and then they get back to the reasonable middle, and they probably take that into account when they're making it all along. But the anxiety that it causes people, talk to us from your perspective as an accountant, what you see government changes do to people and the threat of what could be coming.
Well, let's just use the last example we've got. There's plenty of examples I can use, but the changes to superannuation basically caused that much concern within my client database, old and young, about why the hell would I put money into superannuation? They're just going to continue to change the laws. I believe they pulled back on these laws because the industry super funds and all their mates, if you like, have got together and said, we are seeing a lack of confidence in superannuation, especially with the younger one. So when they came out and pulled back on the unrealised gain element, they came out and they said rather strongly, we're not touching superannuation again. So they've tried to say, that's it, we're not going to touch it anymore because of the anxiety element.
See, I have a theory, which is that superannuation was created by a Labor government after the Whitlam government had to borrow money from a Pakistani businessman, right?
Well, what does Paul Keating say? Paul Keating says, we don't have a national debt problem, we've got $3 or $4 trillion sitting in superannuation.
Exactly, but it's Labor's superannuation.
That's right.
It's their policy. You look at who runs the superannuation firms, it's generally someone who has been heavily involved in the unions or heavily involved in the Labor Party. This is Labor's answer to the big banks who generally support the coalition.
And I always look for greed. If they're worried about people putting money into superannuation, they're worried about their own pensions coming back out. So they're looking at the liquidity problems. If we don't have people putting into superannuation with an ageing population, we're not going to be able to meet our payments. We're going to have to start to sell off some of these overvalued commercial office buildings we might have at a bit of a loss. So there's a genuine concern that if you flirt with a chicken too much, that chicken's going to fly away and you can't keep plucking it as you go along.
I often think that if you're trying to find out what's going to happen in Australian politics, have a look at the UK, where they're looking at raising taxes at the moment. Do you think that tax increases are on the cards in Australia?
Yeah, absolutely. So in the UK, we've got those draconian death taxes. I don't think they're going to work because people are leaving or transferring assets a lot quicker than what they may have done historically. Australia is certainly looking at the death taxes. I don't think we'll actually get something up called death tax. I think it'll be more like the capital gains tax discount rollover relief. So if the family has an asset, I pass away, the asset passes to the next generation. There is no tax triggered until they sell it. It'll be more along the lines of, oh, well, we're going to remove that capital gains concession on passing. That's a death tax.
Yeah.
Superannuation, likewise, if you haven't paid it all out and you don't have a beneficiary, there's a death tax there.
All right, we'll leave it there for now. Always appreciate your insights, Dr. Steven Enticott from CIA Tax. We'll see you soon.
Death and taxes, it never changes.